Good day to everyone. Hope you're having a wonderful day. Please subscribe to our channel, like, and click the button below so that you're part of our community. My name is Carol and I'm welcoming you to a limited edition entitled Interpretation of Financial Records. So we have a course that we do, which is Finance for Non-Financial Managers, very long course. So today I'm just going to, in 5 minutes, explain to you what we would normally go through in 2 days, which is your basics of understanding financials and financial statements, interpreting them, and being able to make something out of them. Many of you will have been asked by the banks to say, please prepare financials or prepare management accounts when you're trying to borrow money through the company, either to buy a property, to buy a vehicle, or just to get a bank loan. What is that in essence? So a set of financials is basically a synopsis that will enable the user of the financials to get a view of the profitability of the business, the solvency of the business, as well as the status of the cash flow of the business. They can also tell affordability, because then if you're profitable and your profit is high enough, then they have the confidence to loan you the funds that you're looking for. The basics of a set of financials are, of course, the cover page, and we would have an index. Then we would have the details of the company itself, the registration number, the directors, the address of the company, the banker, and the tax number. Then we get into the nitty-gritty, which is where you as a director are signing and confirming that you are aware of all that has been disclosed. Of course, we skip right through to the compiler's report or the independent reviewer. If it's an audit, slightly more complex. We're not discussing an audit today. We're simply discussing the mini set of financials, or the compilation as we call them, that you would present to the bank. So the compiler's report is a report signed by the compiler of the financials, and of course this must be an accountant that is qualified, that has a practice number in South Africa, because I'm recording this from South Africa, and there are various accounting bodies that accountants belong to. They just need to have a valid practice number. On the compiler's report, of course, you would then state that the financials have been prepared to the best of your ability, and they are accurate, and they do not, as far as you're concerned, there's nothing there that has been misrepresented. And of course, we then move on to the crux of the matter, the statement of the financial position. This used to be called the balance sheet back in the day when I was in school, and it's basically a statement of your assets and your liabilities, your equity, and it should balance. You should be able to tell whether a company is solvent or not. We will talk about solvency in another video, but here I'm just simply going through at a fast pace. So the statement of financial position should have a comparative year, so that the view of the financials can be able to tell what has happened between the last year and the present year. The statement of financial position is at a specific date, which is usually at year end. Now, most year ends, depending on who registered your company, most people like to stick to the SARS year end. So the financial year end will be Feb, lining up with the SARS year end. Some people have June, some will have December. Whatever your year end is, that is what we expect to see on your financials. Now, skipping forward to the statement of comprehensive income, this is your income and expenditure, which shows us basically your turnover, your revenue, your income, and it'll give a breakdown of your expenses, starting with the cost of sales. That'll lead us to the gross profit. And of course, once you deduct all expenses, we then know Have you made a net profit or a net loss? And of course, if you've made a profit and there's no loss that has been brought forward and confirmed by SARS, then you are liable for tax. Of course, if you are a small business corporation, you're not necessarily subject to tax on the first cent of profit that you make. Again, those depths we will go into in a later video. So once you have the statement of comprehensive income, you now move on to sometimes a statement of equity, right? Now that tells us just your share capital, your retained income. It's not a very meaningful page, but the next one that the banks are interested in is your cash flow. That will tell us exactly what has happened to your funds in the past 12 months, the total that you've received, the profit that you've received, whether you've invested, whether you've financed, whether you've lost money through investment activities, through financing activities, and of course, it'll tell us the difference between your debtors, your creditors, and it should balance back to your bank balance. That is your statement of cash flow. Then we move on to the notes, and those will usually explain the accounting policies, if you've got assets, what rate you've used to depreciate, and the general notes. If there's loans to the directors or shareholders, we need to know the terms of those. Other loans to banks and so on, if they're secured on assets, that will also need to be disclosed. In a nutshell, that is the basic detailed analysis of your financials. Financials need to be done every year. Your income tax return that you submit to SARS is based on the same financials. Remember, you cannot do financials without first doing bookkeeping, and that will be the source document we will use. There will be your bank statements and of course supported by your invoices. This hopefully has been insightful, exciting, and it has helped somebody enjoy the rest of your day.